Well, hi there and welcome to the ISE FX Options Weekly Outlook for February 27th, 2012. As always, this is Jason Ayers of OptionsSource.net. Let's start off with a look at the weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies, while the 79.80 level remains a key overhead resistance for the dollar index. It would take a close above 80 to give us confidence of a change in direction. With last week's close on the lows, we are open to the continuation down towards a test of the 77.78 focal zone. Let's take a look at the daily snapshot. The trend remains to the downside, with 78 assuming the roll-up support this week. A break above the trend line opens the window for a tradable move to the upside towards 80. Next up, the CDD, the U.S. versus the Canadian dollar. Well, the CDD continues to trend down. However, the pair continues to hover within this 99-100 focal zone. A break above 100 opens the window towards a test of 102. A break below 100 opens the window for a continuation lower. Next up, the YUK, the U.S. dollar versus the Japanese yen. Well, the YUK exceeded our anticipated upside target last week, and the 80.5 level assumes the roll-up support. We are open towards a push towards this 81.5, 82 focal zone this week. A break below 80 opens the window for a retracement, which could see the YUK slip down to test 78.5, 79 for support. Let's take a look at the U.S. dollar versus the euro, as seen here in the ISE FX Options pair value EUI. Well, the EUI appears to be heading lower to test the 73.74 support level. However, after such a significant drop, we may see a retracement higher to test the 75.76 resistance level this week. Next up, the BPX, the U.S. dollar versus the British pound. Well, the BPX finished last week with a test of support at 63. We may see a continuation lower towards 62.5 this week. And a break below 62.5 opens the window for a continuation lower. A bounce this week, however, is likely to retest the 63.5, 64 level for resistance. Let's take a look at the AUX, the U.S. dollar versus the Australian dollar. Well, it appears that the AUX is forming a bear flag. However, there is a strong support at 93.94. A break below 93 opens the window for a continuation lower. A break above 94 is likely to yield a test towards this 95.96 focal zone. Let's take a look at our key points. First of all, the U.S. dollar index broke lower last week, and the near-term trend appears to be down. 79.80 remains an important overhead resistance. A break above 79 opens the window for a potential reversal. The CDD continues to hold support within our 99-100 focal zone. As with last week, we need to see a break back above 100 to confirm a continuation higher. The YUK continues to trend higher. 80 assumes the new role of support. The EUI broke support last week and continues to trend lower. We are open to a retracement higher this week to test 75.76 as a new resistance. BPX closed last week with a retest of the 63 support. The trend remains down. However, we are open to a bounce to test 63.5, 64 as a resistance. The AUX appears to be forming a bear flag. However, 93 is a solid support. A break above 94 should confirm a tradable move higher. And this has been your ISE FX Options Weekly Outlook for February 27th, 2012. As always, this is Jason Ayers of OptionsSource.net, reminding you to sign up for your free webinar at www.optionssource.net.